premature death. So risk of passing away before you turn 65, if you're 40 years old today, to 1 in 98. But look at the last statistic. Chance of getting a critical illness before you turn 65. 1 in 3. So when I saw this, I was like, no, I need to put this in my presentations, because a lot of our clients, even ourselves, we have house insurance, we have car insurance, we're comfortable with the life insurance. But what about the critical illness? Look at the statistic. That is crazy. 1 in 3 of getting a critical illness before you turn 65. That just shows you the importance of talking about critical illness and making sure that we provide that solution to our clients. Look at the next slide. Life biggest risks. Really the one that stood out for me here was the fact that Canada has one of the highest rates of multiple sclerosis in the world. Right? Canada has one of the most highest rates of MS in the world. Then we talk about cancer. 1 in 2 Canadians will be diagnosed with a cancer. 50,000 Canadians suffer from stroke every year. 1 in 4 Canadian will contract some sort of a heart attack, heart disease, kidney failure, Alzheimer, dementia, right? These are those critical illnesses. These are the statistics. So that's why I wanted to bring this as a preamble, as an introduction to our topic, because these things exist and we have statistics. So we need to make sure that we provide our clients with those solutions, with those recommendations, with that advice, so that we protect them. So continuing, this is another, I think the other slide was just another design of it, but same thing. Canada has one of the highest rates of MS in the world, so there's different statistics and so on, but it's there. A critical illness doesn't discriminate. Background, age, sex, gender, like you name it, there's no discrimination. That's why we need to protect our clients. When our clients are going to be diagnosed with a kidney failure, cancer, or heart attack, what is going to be the impact? And cancer is by far the biggest claim in terms of critical illness with IA. So when, unfortunately, something happens and there's a diagnosis with cancer, we need to talk about the impact. And there's impact at 3 levels. The emotional impact, the physical impact, and the financial impact. And I'll explain. The financial impact is because I cannot go to work. I'm going to stop working. I still need to put food on the table. I still need to pay my mortgage. I still need to meet all my financial obligations. How am I going to pay for my life insurance? So that's the financial impact. The physical impact is more on the physicality of it. For example, how do you say that in English? Chemotherapy, is that it? For cancer, right? It's pretty good. It's pretty heavy physically. And then the biggest one also is the emotional impact. Devastation, what's going on, what's going to happen. And you as the advisor, you are going to have an impact on the financial and the emotional. The financial, because when you prepare your client and you put in place a solution, they will be happy to have that financial solution. On the emotional aspect, I guarantee you, as you build solid relationships with your clients, they're going to call you and say, Jimmy, I have bad news. Mr. Chris, we need to talk. There's something that happened. And this is where I want you to show emotional support, help your client getting through the claims so that we can pay that quickly and that they can get up to speed and now, work on the physical. And as soon as a good news comes, let's say, don't worry about financial, we have critical illness coverage, it will right away decrease that emotional impact. I hope you understand what I mean, right? So these are the 3 impacts, and this is what we need to protect our clients with. So as we talk about critical illness, this is really an opportunity when we are in front of a client to deepen the relationship. And yes, we're going to start with a life insurance, whether it's term insurance, universal life, access life guaranteed, but also cross-sell. Make sure that we talk about critical illness. And we can do that through the statistics, like I've mentioned, one in Canadian, $3.99 to open the conversation. Or we also have what we call a diagnostic. And it's just an open-ended question that you can ask your client. Have any of your friends, family members, been affected by one or more of the following illnesses or health problems? Cancer, heart attack, stroke, whatever. You would be surprised that there's more people than you think that actually have either friends or family members that have been impacted. And once you hear a yes from those questions, that's your door opener to really propose that solution, put it in place for your clients, right? So two approaches: either we go with the statistics or we go with really kind of that diagnostic, and we ask an open-ended question to ask questions to our client to really understand if there's somebody close to them, friends, family, acquaintances that have been affected by any of those illnesses or health problems. We also have a nice calculator really to make an assessment on how much coverage of critical illness the client needs. And there's just 10 questions here. I use the main source of income, do you have children under 20, et cetera, to make that quick assessment, right? So really two options on how to, somebody had a question? Two options on how to bring the conversation with your clients, critical illness. Either the statistics or those questions, and make sure that you talk to the friends and the families, potentially somebody has been affected. And then we can talk about now the needs analysis. How much coverage would I need, right? Depending on home payments, current bills, car loan, medical home care, whatever, you name it, put it all there. That's how much you need when a critical illness strikes. So the difference between a good advisor and a great advisor is the opportunity to cross-sell, the opportunity to really make sure that you wrap your arms around your client with all the solutions, obviously from IA. The insurance market is pretty big. 60% of Canadians own a life insurance policy, but only 8% of Canadians are covered in the event of a critical illness. So the door is really open for your clients. The market is huge. And that is the difference between a good advisor and a great advisor. The ability to really wrap the arms around the clients, provide best-in-class solutions to protect their health, the family, so on and so forth. That is the introduction of the training that we're going to have today, and our product is called Transition. Transition is critical illness insurance. It's a financial assistance to meet your client's goals when something happens. Critical illness insurance will provide your client with a lump sum, tax-free, when they are diagnosed with one of the listed illnesses. And we have two versions of critical illness in Transition. I will show you. But as you offer Transition through a standalone contract or a rider, I want you to mention this to your client. This is the #1 critical illness product in Canada. I'm going to repeat. Transition with IA Financial is the #1 critical illness coverage in Canada. We dominate the critical illness industry. So people like what people have, right? So as you segment your sale, you can also mention that, oh, and by the way, Jamie, this solution is the #1 solution in Canada. So you're really in good hands. That's how you're going to cement that sale. So our product is called Transition. That's the name of it. And critical illness will cover your client with, will give your client a lump sum tax-free payment in the event of a of a covered critical illness. And the word covered is important. Now, that financial assistant, and remember a few slides before I talked about the 3 impacts: financial, emotional, and physical. This is where we will take care of the financial. So that financial assistance will help them replace their income, pay their day-to-day expenses, meet their financial obligations, and not necessarily deviate from their life goals, retirement goals. I'm putting money for my retirement. I want to make sure that although I get diagnosed with a cancer, I'm still going to be able to put that money aside and hopefully get to my retirement goals and dreams. And when we talk about critical illness, we also need to talk about the survival rates, because the medical industry has evolved so much that there's more survivals to those critical illnesses. So we need to also talk about the survival rates and make sure that we put solutions in place for our clients. And that is the financial assistance that will provide that critical illness coverage. So far, we good? Am I good so far? We good? Awesome, very good. So we have two versions of our critical illness coverage. We have the transition 25 and the transition 4 illnesses. Okay, you cannot negotiate and say I want transition 26 or transition 10. No, it's either 25 or 4. And these are the illnesses that are covered. So when I choose transition 4, my client will be covered for cancer, and it's life-threatening cancer, because there's also non-life-threatening cancers. So my client is going to be covered for cancer, coronary artery bypass surgery, heart attack, and stroke. These are the 4 illnesses. And then you see that we will find them also in the transition 25. They are included in the transition 25. We have the cancer here. We have the artery bypass surgery here. We have the heart attack, and we have the stroke as well. So they are included in the transition 25. However, when you do your illustration, when you are about to make a proposal to your client, I want you to always start with the transition 25. Always start with your best coverage, right? So that gives you an option potentially if there's a rebuttal on the price and so on to downside, but always start with your transition 25 first. It's the most comprehensive coverage. As you see, it provides coverage with to 25 illnesses. So please, as you navigate in your illustrations, make sure that you pick transition 25 first, because we always want to give the best to our clients. Okay. This is just a quick slide on claims, showing the distribution of our CI claims paid, well, IA, but also in the industry. And you see that by far, cancer dominates, unfortunately. But when you take a look at the 4 illness version, and we said cancer, artery bypass surgery, heart attack, and stroke, those 4 illnesses represent 85% of the claims paid. So it's still a good coverage, right? It's still a good coverage. We do want to quote first with the 25 and then work our way potentially, depending on the client situation, financial and so on, and get to the 4. But the 4, transition 4 illness, is still a pretty good coverage. Okay, so if we're looking at the comprehensive coverage, it's the transition 25. There's a lot of different options. We'll go through the product at a glance. The transition 4, yes, will be more affordable, because instead of 25 listed illnesses, we're covering 4 listed illnesses. And those 4, again, represent a good 80 to 85% of the claims that are paid. All right. And I need to change this slide because there's been some changes to the products lately. Now, when it comes to the coverages, we have term 10, term 20, term 25, T75, and T100. 4 options. So T10, T20, T25, T75, and T100. T10 will cover my clients for 10 years. T20 will cover my client for 20 years. The T25, I really like, will cover my client for 25 years. These are the terms. Those terms are renewable and convertible. So if I take a term 10, at the end of the 10 years, it will renew for another 10 years. Or I can convert into a T75 or a T100. And the conversion is done without proof of insurability. So that's also a good benefit of those term policies. I can start with a term 10 or term 20, whatever the case is, depending on my budget. And after that, I can convert to a T75. The T75 will cover the client until the age 75, and the T100 will cover the client until the age 100. When we select the T100, we have two additional options. We can have a 10-year pay or a 20-year pay. Only on the T100, right? This is a good strategy for, again, when we have children, parents or grandparents that want to put in place a gift for life for their kids or grandkids. You can take a T100 paid in 10 or 20 years. So when the kid is 10 years or 20 years, the cost is so low because they're a child, but then the policy is paid, right? So that's another good gift. So we have those options: T10, T20, T25, T75, and T100. We have a maximum 3 million for insured between the age of 18 and over, and below 18 is $500,000 maximum. The face amount is level, and this is new. We used to have a decreasing face amount, but now we only have a level face amount. And then the type of insurance also is individual. So we used to have 2 or more insured under one contract. This is a change that IA made as of November 24. Now the type of insurance is individual, and the type of face amount is level all across, at large. So just summarizing, so as of November 25, we have, first of all, there's no more decreasing face amount. It's only a level face amount. If you were familiar with this product, we used to have a decreasing to 50%, and that was a good plan to kind of have a mortgage coverage. But now it has been removed, and all the face amounts are level, so level face amount regardless of the option. And another change, we replaced the increased benefit rider by what we call now an insurability guarantee, and I will explain later. That's another change. So we kind of retired the increased benefit and replaced it by the insurability guarantee. It just brings more flexibility to the product. With the critical illness, you can have it as a standalone or a rider on the universal life on a term policy. With the rider, you have limited options. With the standalone, you can offer return of premium on death on all of the coverages. And then with the T75 and the T100, you can have flexible return of premium. Flexible return of premium. We do have a very good strategy concept called shared ownership, and this is corporate critical illness. And then we include the flexible return of premium and the return of premium on death. So if you have business owners or corporations and you want to talk about this concept, the shared ownership critical illness, let me know and I can walk you through and we can build it together. So it's available at the individual level, but also for corporations. So the options removed, like I mentioned, the decreasing to 50% face amount was removed in the transition 4, and same thing with as a rider and as a standalone. So there's no more decreasing to 50%. Anyways, you won't see that on Evo, so don't worry. If you don't see something on Evo, that means it doesn't exist. So it's not on Evo anymore. I just wanted maybe for those who are familiar with the product that the decreasing to 50% is no longer available. And then we also now we've retired the increased benefit rider and we replaced it by the insurability guarantee. So in terms of riders, we have, I mentioned that the term policies are renewable until age 75. They are also convertible into a T75 or a T100. Don't worry about the rate bands. And then we have the return of premium riders, the flexible return of premium, and then on all coverages, the return of premium on death. The flexible return of premium, why flexible? Because it's not 100% that you get at a certain point. It slowly increases. So it's the return of premium is flexible based on the duration and on the option that you choose. So that's why we call it flexible return of premium. But at some point, depending on the option, you will get 100% of the money that is paid returned to you if you decide to exercise the return of premium, including the riders, any rating. So every single dollar that you've paid and you have the flexible return of premium will be returned to you. The flexible return of premium, we have 3 options. the FRP 15, FRP 20, and FRP 65. This is for 15 years. It starts in year 5 of the contract, and after 15 years, you can get up to 100% of the premiums that are paid. The FRP 20 works kind of the same way. Only difference is you get 15% on starting on the 5th year, but this one is at year 20 that you get 100%. Okay, and then the FRP 65 starts at age 55, and then until age 65, you get 100% of the premium that you've paid. So just quickly showing you how the flexible return of premium works. Anyways, we can illustrate it on Evo, and I will show you. Now, oh, there's a small error here. It says what sets us apart. You should read what sets us apart, okay? Just a small error here. But anyways, we do have the covered juvenile critical illnesses that are included in both versions, whether the 25 or the 4, it's included. So there's no additional premium for that covered juvenile critical illness. And then we have the prevention plus benefit. Prevention plus benefit. Prevention plus will provide your clients with 15% to a maximum of $50,000 in case of a diagnosis of the following 7 illnesses. They tend to be non-life threatening. Okay, a little technical here. I'm not sure I'll be able to read them, but Prevention Plus is an additional coverage. It's included, and when your client is diagnosed with one of the following 7 illnesses, they can get a payment of 15%, 1.5, to a maximum of $50,000, and that does not impact their main coverage. So it's additional, it doesn't impact their main coverage. I think I have an example here with a demonstration on how this prevention plus benefit works. We have here a client with a 4 illness transition policy. Face amount is $125,000. They get diagnosed with stage 1 papillary cancer. Because they have prevention plus benefit, they will get $18,750. It's 15% of 125, and they still have the full 125,000 in the event of a 4 illness that they're diagnosed with. Okay, so it's on top. They can exercise this option up to 4 times. Up to 4 times. It's here, payable up to 4 times per contract, once per illness. So just a nice additional plus. These are tend to be non-threatening, and then in case of diagnosis, well, you can get, a partial benefit out of your critical illness. 0 impact, no increase in the premium, and no impact on your main coverage. So I'm going to skip the other example, and another service that we have that is included in our system, in our product, is called MediGuide. MediGuide allows your client to obtain second medical opinion when they're diagnosed with a covered critical illness. And this is very interesting because if there's a diagnosis and the specialist for that condition is not necessarily in Canada, they can get a second opinion for that person wherever they are, US, Australia, you name it. So that's what MediGuide does for your clients. It's unlimited access. There's no additional cost. They can really get the expertise that is required from a specialist to get to their condition. Okay, and this is free of charge. So there's 3 options that are included: MediGuide, prevention plus benefits, and the juvenile critical illnesses. Free of charge. De facto, they are included in our transition coverage. There's a little bit demonstration here of how does MediGuide medical second opinion works. Just trying to see something here at 30 seconds. Okay, I will move to a demonstration. I want to show you, do you see, no, I'm going to put this in English, or I'm going to go here. Any questions so far as I'm launching the Evo? Any questions? Silence means no. No questions. We are good. We're good. Okay. We said up to 40 transactions, right? I can show you a list of up to 40 and plus transactions that you can do. Conversions, we're working on it. This is the only thing that is not available, but anything else is available. Sorry? We are working on it. You know, those changes, you know, I heard that EvoWeb was 2 years delayed. You know, technology, like those massive changes like that take time and resources. So they've been working on making sure that we launch EvoWeb first. It's all working, no glitches, everything's fine. Then we added, make an change. Keep in mind that we also want to add all the AssureNGO products to this platform with the data, with the database and everything. So it takes time. Right now, conversions is still paper, and that's the only one. Anything else, you can essentially self-serve. So, sure. We usually go, again, it depends, but you know, some people like to go one time their salary, annual salary, twice their annual salary, or you can also make that calculation. I'm not a big fan of throwing numbers. I'd rather go with understanding the client situation. You know, if my client is making $250,000, 50,000 of coverage won't go anywhere, right? I want to cover at least the coverage. If my client is making $60,000 a year, yeah, 50,000 may be enough. So I'm not a big fan of throwing numbers. I'm more into making sure that I understand the client situation, I understand their financial obligations, the day-to-day, and then I plan accordingly. With some clients, I've seen it, you know, you make your assessment and they want you to be a little bit large and put another $15,000 or $20,000 because they want that safety net as well. And we do it, they're comfortable with the price, then we move forward. So, but yeah, you could go with kind of the one time or twice the salary. Okay. I realized that I did not talk about the increased benefit. But anyways, we are going into Evo. You should see now my Google Chrome. Let's put this in English. Mine says employee space, but for you, you'll see advisor space. When you're in your advisor space, really like the navigation, just one click away, you have here launch Evo Insurance from the home, from the home tab. So launch Evo Insurance. Do this here. By the way, on the products section, you have access to all the product information. I'm demonstrating here. You go to the product. You have critical illness transition here with a lot of information, forms, marketing documents, everything is available. The diagnostic that I mentioned is here. That calculation to see the financial impact, you have it here. A nice video on the medical second opinion, MediGuide. So lots of useful links in there. Going back to Evo, this is our platform for illustrations. On the left, you have the navigation, the product section. I want to show you the critical illness comparison here. I really like this functionality because instead of doing multiple illustrations for your client, when you put their date of birth or the age and the gender, you can have here a good dashboard of all the products and how much the premium would be. So then you don't have to do, you know, different illustrations. So just here, critical illness comparison, right? So I'm defaulting here 40 years, male, non-smoker, $100,000. How much is going to be a T10 for illnesses? Oh, 33 a month. Okay. How about the 25 illnesses? $43.92. All right. The T20, the T25, right? So you have that at a glance. You can even, your client wants to pay annually, you can change it to annually, and this is Quebec by default, but you can make sure you change to your province. You have the annual premiums as well. You can even solve for the premium. You can solve for the premium and say, okay, client wants to pay $1,200, or, this is what the client wants to pay. What can I get for this? Right? So $1,200, I can get transition for illnesses T10 for $371,000. So you can solve either for the premium or for the face amount. Really good tool instead of doing multiple, illustrations for your clients. So just here, critical illness comparison. On the product section, we have critical illness. I will select critical illness, and you see the term coverages, the permanent, transition 25, transition for illnesses. We have the shared ownership concept, which I spoke about. It's for corporations. It's in there as well. And you have basically all our products here, just one click away. I'm going to take the T25 and building the illustration now, changing the province. So obviously I went through a standalone coverage. When you have a standalone coverage, you have a policy fee that is included. You know what? I'm just going to make a nice demonstration. We have John Smith. Male, non-smoker, apply, 31 years old, male, non-smoker. We want $100,000 of critical illness. The cost is $40.95. It is actually $35, and there's a $540 policy fee. When you are on a standalone contract like this, and you see a policy fee, if your client has liquidity, and they can pay annually, they will get kind of a 1 month of a discount. So I'll do the demonstration. In this scenario, monthly premium is $40.95 times 12. It should be $491.40. But when they pay annually, it's actually $455 instead of $491. So when your client has that liquidity and they want a standalone coverage, you can make them save almost a month of premium. And everybody likes savings, right? So just another quick hint here, that if you see a policy fee when your client pays annually, then they can get almost a month of discount. So I still have the premium comparison tool here. Now the difference is that it's customized now with my client information. The other one was just general. When I get into an illustration, I still have my comparison tool here where I can make some comparisons with the T10, T20, T25, the T75, and the T100, just getting that information. I can close these. Then I can change the product, T75 or T100, with a quick payment here. I can also change the version, either a 25 illness or a full illness. Right now, the 25 illnesses is $40.95. I want to see how much is going to be the 4 illnesses, $28.71. Then I see all my riders, the return of premium on death. Yeah. I move to the T75. Now I have the flexible return of premium. Flexible return of premium is available on the T75 and the T100 only. So that's why you didn't see it when I selected the T25. So finishing here, T75, when I put the flexible return of premium, FRP 15, so that means after 15 years, he's going to be getting 100% of the premium. The additional cost is $38, but keep in mind, he will be getting the return of all the premium. And when I go in the reports, no, it's in the results. So left, I go in the results. There's a nice table here. I just enlarge, and I see here my flexible return of premium from year 5 to year 15, and it keeps growing. But at year 15, I get 100% of the money back. This is the accumulation starting on year 5. And then at year 15, you see that these columns are matching. So year 15, total payment will be $16,000. Flexible return of premium 100%, $16,000. And then it matches all the way. So you don't need to calculate the flexible return of premium. When you select it, you can actually illustrate it and visualize it with your client. Visualization sometimes helps your client make the decision. Same thing with the FRP 65. When I select it, I can go into the results, and same thing. I see that from age 55 till age 65, this is the flexible return of premium. So this is the money that is going to be returned. Yeah. So I don't make a claim, I get the flexible return of premium. I don't make a claim, I get my 100% of my money back. That sounds like a pretty good deal, right? But if I get diagnosed with a critical illness and it meets the definition, in this scenario, I is going to pay $100,000. So I think it's a really good deal. So this is a standalone coverage with a critical illness. I will add another scenario. We really like the universal life, and same thing. I'm going to do here universal life. I will change to add the insurance that I have right now. And same thing when I go into the add a coverage or a rider, I see either 25 or 4, so I see the both versions, and I see the coverages. But I don't have the flexible return of premium, and I don't have the return of premium on death. But it's available. But the coverage is available as a rider. So there's two different options. So scenario, I can have it standalone, or I can have it as a rider. I actually did not add it. For example, T25. When you select it as a rider for the projection period, I want you to match the term. Otherwise, you will screw the numbers. Sorry. So always match the projection with the term that you select when you're doing a term policy. That's it. And the rest will be just going to the application, following up the steps. In critical illness, the family history is very important for the underwriting, right? So when you select critical illness for your clients, ask those family questions. We are looking for the immediate family, father, mother, brothers, sisters, any diagnosis, premature death before the age 60 or 65. That can potentially have an impact on their insurability. That's very important. So ask those questions as well. I thought I would just talk about, just to finish with a client's testimonial. We have here a real life story. At the age of 35, Mr. Scott Dempsey purchased the transition product on the advice of his financial advisor. 9 years later, he developed a disease that led him to losing his sight. Having lost his job, he resigned himself to putting his house up for sale. But shortly thereafter, his advisor, Greg Baldwin, arrived at his home with amazing news: $100,000 check. So then he didn't have to sell his house. We're trying to get more information from the claims team, and actually claims data and claims stories. This is the only one that I found. So thought it would be good to share it. But really, it is tangible. It is really tangible. The critical illness coverage, this opportunity that we have to deepen the client relationship, talk about those diseases, talk about the statistics, make sure that potentially our client has been or has not been exposed in their families and friends, and really build the solution, build the coverage, and protect them accordingly. Okay. Then we have the office contacts. You have that. So today I wanted to go an important topic. We are very comfortable with life insurance, but we are coming in also with our one-stop of health and disability. And today I wanted to cover critical illness. I went maybe a little fast, but now I will open it up if there's other questions. Yes, yes. I've seen cancer exclusions. Yes, it is unfortunately common when you have that history in your family. Unfortunately, you are at risk, and then the insurance company will exclude it. So they will cover you for the other illnesses, but then that particular one it will be excluded. So yes, you're right. I've seen that. Yeah. The premium stays the same. The premium stays the same because, just the coverage is there. Um, excluding one disease, regardless, we will still be paying $100,000 or whatever you have on your insurance contract, right? So the premium doesn't change when you make an exclusion. The premium is the same, but an exclusion is a good news story for a client because at least they are accepted. Let's say I have 25 illnesses, and lately in last week I had one with breast cancer exclusion. Yes, but there's still the other 24 illnesses that you're covered with. So when you see exclusion, when you see ratings, because when there's something, we can either go with an exclusion or a rating based on the client's risk factor. When you see these two, these are really, really good news for your clients. These are really good news. Insurance is not a right. Insurance is a privilege. So now, client, congratulations, you get accepted. Let's discuss let's discuss the offer. Rating, exclusion, but always has to start with congratulations, you gotta get accepted. Because insurance is not right. Insurance is a privilege. Now you have the privilege of being covered with a critical illness insurance. Let's discuss the details of offer. So I really want you to make sure that we put a positive feeling when there's a rating or an exclusion. That's a really good point that you bring. Okay, well, that was for me. We'll be back if you want. This is my last training of 2025 with this group. It's been really an amazing 2025. Just to let you know that this is my last week. As of next week, we're going to be off for 4 weeks. Time to